I've gotten a lot of requests to kind of cover my own trading strategy, how I make my choices, why I look to long certain levels, and I'm going to try to give you guys a brief guide on how to do that for yourself. And I can honestly tell you that my approach is really, really simple. And I hope that this is a good introduction. It's definitely not going to cover everything, but what we want to kind of do, the first thing we want to do is identify the swing points of price, okay? And the way we do that is by looking for candles like this. Okay, let's just zoom in really close and kind of take a look and just visualize what happened. Okay, so we have this is our range, right? And we can see that we traded above. So I'm just going to take all these highs and just mark it off with a line, right? And if you guys look, so here's our price. We came through, we came back, and think of this red candle as actually extremely strong because you have all these upside wicks, and this was holding as resistance, but now you're actually closing above, right? So there it is. You bust right through that because it's all gap. And then this is the same idea where there's obviously some resistance here because you have this upside wick, and then we just bust through it again, right? So all I'm going to do is take a line and just mark the top of that wick, okay? And if we look, this is already going to work with no TA. I'll do the same thing on this side actually. So when you mark these significant points of the price, you're going to find that they're going to line up with key support. So this upside wick is now going to be the price's support, right? And if we take this same level, you guys can see that this all falls really, really cleanly into it, right? And we don't need to use a line. A line is not, I don't love using lines because it's a bit too precise. So let's just take this whole thing and actually just call it a block. And we're just going to draw this block all the way over and connect as many wicks as we can. Okay? We're going to do the same thing here. Instead of drawing these two lines, let's just draw a block. So let's go look. We have these two downside wicks. These look pretty significant to me. I mean, look at this. These push the price up over 50%. So these probably are pretty important stuff, right? And then we have the same confluence from the fact that this held as resistance. So let's just take a box and just draw it all the way across, okay? That's it. That's all we need to do is take this box and just draw it across. And it's going to work, okay? I promise. So we draw this all the way across, and let's just look how the price is behaving with this box, right? Because it's actually pretty interesting. So if we look, this box is kind of our key support, key breakdown area, right? And let's just keep drawing it over. Well, if we keep drawing this over, and it's a bit wide, even from my take, I'd probably draw this a bit lower and maybe a bit thinner like this is probably better. And if we look at this, it's actually serving as a key inflection point for the price. Let's do the same thing with this box. Would you look at that? This box is our support box. And if we look, every time the price is trading into these wicks, and all we did, guys, was take this candle right here, this upside candle, these wicks, and just drew a box. And when we follow the box all the way across, we can see, well, now this box is support, right? And this kind of makes sense because this is typically how prices like to trade. Again, so you kind of traded all the way down into here. You rejected off this, right? You couldn't really get a strong close above, came back down to support, and then you sent. So people have often asked me why did I choose to kind of long, yesterday around here? Well, that's because you have all these wicks, right? And if we could do this on any time frame. But if you count off these significant wicks, they're gonna often be a swing point for the price, exactly how this served here. So what I typically find is it doesn't actually take a ton of like brilliance to really do this. I mean, again, we can even draw this. This is a pretty weak box, but you have all those wicks, right? So let's just draw it across, make it line up with our wicks, right? They're right over here. I lost it. And then there you go. So it's not always going to be super clean, but again, there's your level, there's your demand, and the price continues higher. And we can do this in both directions, right? We can draw a box through all of these guys, right? And if we look, these are also going to act as a support resistance, right? Price tried to trade above, broke back down, retest and failure, right? Resistance took us directly back to support. And that's what you'll notice is that in between these levels, there's really not a ton going on. It's just air. It's really just air. So again, like as you trade back to this demand, you're going to get a more significant reaction. And if we can keep drawing this across, but it's pretty clear what happens, right? We can't flip this level, and we just trade back down again. And where are we trading now? Well, I mean, we can draw this all the way across, right? And we know it's going to work the exact same way. Let's see, if we draw this box all the way across, it's going to be support, right? Until we broke down right there. And it's the same thing here. It's just support resistance now. So if we flip this box, we're probably going to continue to trade much higher. And all of this TA took me about 6 seconds, right? It's not actually that hard. So if I'm predicting the price, do I want to do anything right here? No, this is no man's land, right? This is just a gap. So there really isn't much for me to do. But as the price trades into here, maybe I want to open a short. I mean, probably not, personally. I think we probably go much higher, but you can use these key inflection points to make an educated decision. So let's look at something like Solana, right? It's a very, very similar thing. So let's look at our wicks. That's the first thing we're always going to do, is simply start by looking at our wicks. And this is immediately, obviously, a clear inflection point. So we're just going to draw a line here. And we will get faster at this with time, but we're going to take our rectangle and just connect all of these wicks. Okay? This is our key support. Why? Why is this key support? I haven't even looked at the rest of the chart yet, so how do I know? Because from this level, we were able to pump 40% within 5 minutes. Well, not 5 minutes, but you guys get the idea. The immediate reaction off this is extremely strong because there were lots and lots and lots of buyers down here, right? And again, if we do this, we'll see it's another support resistance type deal. I didn't really have to draw that across, but I could have. It's just easier that way to visualize it. And when we come back and retest this level, it gives us a strong reaction. And what you guys are going to notice is that when the price comes back for stuff like this, it's always going to be strong. So let's just mark that out. That's our first key level. And it's not going to be too important because we're not going to use it. But what we're going to do also is, again, look at these levels. So here's your upside wick. This nuked the price. So this also has significance. And then you have these downside wicks that coincidentally just happen to fit perfectly on this box, right? And let's just draw this box across. Again, that's really all we have to do. And then look, again, it held as demand and nukes right through. And this is probably going to be our key inflection point throughout the entire range. As you guys can see, this box is demand, right? And I'm not doing anything. I'm just taking the wicks and drawing them across. Let's go find our resistance. Why was this level acting as so much resistance? I talked about 162 a lot, and that was this wick here, right? So how did I know that this was going to stop up here or here? Well, let's take a look. I'm going to take my rectangle again and simply look for these downside wicks. Okay, so we got one over here, one over here, one over there, one over there. And all I really want to do is draw a box that connects as many of these as possible. So I'm going to do like this. Don't need all of them, but I need most of them. So maybe like this is probably a bit better. We don't really need this one. We want 1, 2, 3, 4. Maybe you have 5, 6 up there, but it isn't so important to be perfect. It is going to tend to work out pretty well by itself, right? And then there's our resistance up there, right? And if we draw this a bit lower, well, you'll see why that was resistance, right? There's your wick, and now this became resistance. So why does this work? It's pretty simple. If you can mark out the key inflection points in the past, they're going to often serve as key inflection points for the future. So people ask me, why did I think the price was going to trade higher? Well, when you have stuff like this, you're leaving a bunch of liquidity, right, just above these highs, okay? And when you do that and you have this kind of impulsive move off support, you're probably going to rip right through. And if you guys look, I think I called the short target for this to be exactly 156. Why? Because all your upside wicks were sitting here. So if the price was truly bullish, you were going to get this small retest of support, previous resistance becoming now support, and then you just expanded straight through. And now you're trading back above this key level up here, right? So if you stay above here, you're probably going to trade much, much higher. And that's why I think I'm so bullish on Solana overall. So this is a good introduction to kind of learning how to plot liquidity. You guys can let me know what you want me to talk about next. I want to kind of expand on this subject and teach you guys how to make trades like this. But in the meantime, just kind of practice looking at these charts for yourself, practice drawing these boxes, submit them under the trading table chart, and I'll take a look. It really is not that hard. And I truly believe we all can become excellent traders. Really just drawing lines and boxes. So yeah, I will catch you guys in the next one.